Okay, everyone. Thank you so much for joining us today. My name is Jiyae Hwang. I am a senior associate at Scott Legal PC. Today, we are going to spend some time discussing the E-2 visa requirements and considerations for the renewal of an E-2 visa. So just a few things before we get started. Some of you may know that the firm was actually founded on an E-2 visa 10 years ago. The founder of our firm applied for an E-2 visa to come to the US to establish Scott Legal. The firm has successfully renewed its E-2 visa as well. This gives us very deep familiarity and expertise with E-2 visas. Scott Legal is a full-service immigration law firm, but we do focus primarily on E-2 visas. We have processed hundreds and hundreds of them, and we process many E-2 visas that are higher risk, which means lower investment amounts, and we have done many renewals as well. We have processed at consulates around the world, but our primary two consulates are Toronto and London. We are continuing these webinar series, and we are doing at least 2 webinars a month on different immigration law related topics. And at the end of this webinar, we will send out a few resources to all participants. First, we will send you all a copy of the PowerPoint that will be used in this webinar. Second, we will send you all a comprehensive guide to the E-2 visa that you can use as a resource. We will also send you a link that you can follow to sign up for additional webinars that are coming up in the future, and also a link to this webinar as it will be recorded. This webinar will be made available on YouTube, and we encourage you to subscribe to our YouTube channel and hit the notification button, as we do regularly upload a variety of immigration law related videos. Finally, we will send you a link that you can follow to set up a consultation with one of our experienced attorneys, should you wish to discuss your case further. As for today's panelists, we are lucky to have Kelly Weiner, who is the managing partner of the firm, who has a leading expertise on processing a wide variety of E-2 cases and renewals. Finally, for any questions you may have, please feel free to add them to the chat box or use the Q&A function, and we will try and get to all questions. So without further delay, I will start the presentation. All right, so let's begin with an overview of the E-2 visa rules and regulations. So the E-2 visa is a non-immigrant visa for individuals who are nationals of certain countries called treaty countries that have treaties of commerce and reciprocity with the United States to come to the United States to develop and direct the operations of an enterprise, a U.S. enterprise, a U.S. business, in which he or she has invested. So it is important to note that the E-2 visa is a non-immigrant visa. It is not a green card. And the E-2 visa won't necessarily directly lead to a green card, but it is possible for an E-2 visa holder to continue renewing, extending the visa indefinitely, as long as the applicant continues to meet the E-2 visa requirements. Now, there are different options that you can follow in obtaining an E-2 visa. You can either purchase an existing business in the United States, or you can establish your own startup business in the United States. So those are the two options you can follow in applying for your E-2 visa. Now, there must be a treaty between the United States and the foreign country of which the applicant has nationality. And a wide variety of countries do have this treaty with the United States, and pretty much countries, running the gamut across Europe, Africa, Asia, Latin America, Middle East. A wide variety of countries do have this treaty available, for which it is necessary for you to qualify for the E-2 visa. Now, examples of some countries that don't have this treaty include China, for example, and Russia, where unfortunately, if you're a national of those countries and you don't have any other nationality with the treaty country, you will not be able to use the E-2 visa option. Now, it is also important to note that this treaty country nationality does not relate to the country of birth. It only relates to the country of nationality. So let's say you're a dual citizen and you have multiple nationalities. If one of the nationalities is a treaty country nationality, you will still be able to pursue the E-2 visa based on that particular nationality. Now, for how long is an E-2 visa valid? So that really depends on the reciprocity schedule, which means what is the particular arrangement that your country has with the United States according to these treaties. And so the validity period of the visa can vary quite widely. It can be as short as 3 months to as long as 5 years for some countries. So really, it depends on your country of nationality. All right, so now let's go a little bit further detail on the detailed requirements on qualifying for the E-2 visa. So the first requirement is that, as I mentioned before, you must be a national of a treaty country. And being a national means holding a passport from that treaty country. It does not relate to the country of birth necessarily. It means you're a citizen of a particular country that has made this bilateral treaty with the United States. Second requirement is that you must make an investment. And what does investment mean? An investment means funds that are placed at risk. And what does it mean to place funds at risk? It means actually spending the money. So if you buy, equipment for your company, if you spend money on legal fees on setting up your company and preparing for the E-2 visa, if you spend money towards a lease, a commercial lease for your office space, those are expenditures that can count as startup investment. If you just transfer funds from your personal account to a E-2 business bank account, and if it's just money sitting in the bank account, unfortunately, many consulates would not consider those as money truly been placed at risk. Now, source of funds. It is very important to be able to prove where you obtain the money that you use for the investment. And any legitimate source could work, including personal savings from employment. It could also be a gift from someone it could be a gift from a family member even. In those kinds of cases, you want to go one step further and also prove where that person, the gifter, earned their money from. So let's say your spouse gifted you, $50,000 to use towards your business, and you get a signed gift letter from your spouse. Now, where did your spouse earn that money, the 50K that he or she used to gift you? So we want to go one step further and also identify the source of their funds, of the money that was gifted to you. Sale of a house, for example, sale of property that you own, could also be one source. In that case, you would want to provide evidence of the sale through a purchase sale agreement, and also provide the trail of the money coming from the buyer to your account, the seller, and the trail of that money flowing into the E-2 business. You could also use a loan. Now, the thing to note about the loan is that it must either be an unsecured loan, or if the loan is secured by something, it should not be secured by any of the assets of the E-2 business or secured by the E-2 business itself. So it is very important to clarify what are the terms of the loan. Is the loan secured by anything if you're using a loan as a source of funds for the E-2 investment? Now, another requirement is that this investment must be substantial. And what does this mean? Substantial investment means that an investment that is sufficient to really, if it is a startup, get the business up and running. So if it is a smaller business that you're investing in, you must have invested pretty much 100% of the funds that is necessary to really get the business up and running. Now, if you are buying a business, right? If you have sourced the business on the open market, for example, and paid the fair market price of that particular business, then that will satisfy the substantiality test. And there is a proportionality test that the government uses in terms of viewing what type of investment is substantial. So for example, if you're investing in a $10 million business, even if you invested only 10% of the funds that is required, let's say you put forward like 1 million into that, enterprise, that could also meet the substantiality requirement, even if only 10% of that business's total value was invested by you, just because the total price of the business is so high. So it really also depends on the scale of the business enterprise itself. Now, what are some typical E2 expenditures? What would be some areas that you would spend money on if you are, working on a startup that could count as funds placed at risk, right? So those places of investment include, things like inventory, equipment that you need for the business to operate. This can include computer equipment, for example, printers, scanners, things like that. A company website, any costs that you incur on setting up the company website could also be included as E2 expenditures. Office supplies that is necessary for you to run your business. The rent that you pay to set up a commercial lease for the office. If you, have a lot of merchandise that you're selling, definitely if you rent a warehouse space, that could also be relevant for E2 expenditures. Any money that you spend on marketing expenditures, setting up, advertisements and things like that. And also any legal fees that you pay to set up the business entity in the United States. All of those expenses can be very good E2 expenditures. And so when you're starting an E2 enterprise from the ground up, or whether you're purchasing an E2 business, an existing business for your E2 enterprise, one option you can use when you're purchasing a business is that you don't, it's an escrow arrangement where you would transfer the purchase price to a third party with, that has an agreement with you and the seller to hold the funds. That is possible as long as the only condition for the release of the purchase funds is the approval of the E2 visa, right? So there is a safeguard in that sense that you can use if you don't want to put all of your money at risk when you're buying a business in particular. And this option is really only available if you're purchasing a business. If you're starting up a business, you don't really put money in escrow. The thing to note about that is this can, practically protect you if you don't want to transfer the entire purchase price to the seller before you apply for the visa, right? So the escrow arrangement is one option you can take if you want to have that contingency, but definitely the restriction is that the only contingency from you for the escrow agent to release the funds should be the approval of the E2 visa. There cannot be any other condition for the escrow arrangement. So that is one thing you need to be careful about. All right, marginality. What does that mean? The business cannot be marginal. It means the business must be one that will generate enough income to not only support the livelihood of an investor and his or her family, but also must be enough to support U.S. employees. And that is why the perspective to hire U.S. employees is so important for an E2 application. The other requirement is that the business must be real and operating. And what does that mean? Either the business is already taking revenue or the business is pretty much ready to start operating after the E2 visa is granted. This means most of the groundwork for setting up the business must already have been secured while you're applying for the E2 visa. So for example, a commercial lease for the office business, the business space must already have been signed. The U.S. business entity must already have been established. You must have already created the company website. And it is also beneficial to your application if you have contracts in place with customers. If your business requires any licenses, you should, be prepared to bring proof that those licenses have been secured. The other requirement is that you, the applicant, the principal investor applicant, must be coming in to solely develop and direct the E2 enterprise. If you are approved for the E2 visa and you come in, to develop and direct the enterprise. You cannot, work for any other company or do anything else like that. You must only work for the E-2 enterprise for which you were approved the visa for. The other requirement is that the treaty country national must own at least 50% of the E-2 company and have majority ownership that will give them the control over the enterprise. The final requirement is that the individual must have the intent to return to their home country after the expiration of the E-2 visa, after their enterprise has finished, and this can typically be satisfied by a signed declaration of the investor to that effect. All right, so let's talk a little bit about the amount of investment, and we already discussed a little bit on the previous slide, but how much investment really is enough? And the requirement is that the investor must put in a substantial amount of money. There is no minimum dollar amount that the government specifies as a matter of law. And really the minimum practically depends on the type of the business, what is really the range of investment required to really get that type of business particularly up and running. Also, the minimum amount would depend on where you apply. So certain consulates around the world have a higher standard of what counts as a substantial investment. And some consulates would consider anything that is below $100,000 as not a substantial investment. Some consulates would think that those dollar amounts are simply too low. So definitely consider where in the world you are applying. And also it could depend on the examiner, the particular examiner that you get on the day of your E-2 interview. Finally, how much money you would spend on your business would also depend on the overall strength of your case. So if the other aspects of your case are strong, such as marginality, for example, if your business entity is already earning revenues, or if you can present client contracts and client letters of intent showing a high potential for revenue generation, perhaps you don't need to rely so much on showing a high amount of investment to show that your business is, ready to run and has that potential to operate successfully. So each case is different, and the facts of each case is different on what dollar amount would really be an appropriate dollar amount to invest in for the E-2 case. And I mentioned this briefly before, but the proportionality test is what the government uses to judge whether a particular investment is substantial. They would compare how much money you invested with what are the usual costs to establish that type of business, right? So for a smaller type of business, such as a consulting firm, consulting type service-oriented firm, with under 300,000 valuation, the government would expect that you would have invested 100% of the cost that's necessary to get that type of business up and running. And you would and to prove that you have truly spent everything that is needed, you could include things like a letter from a certified public accountant, confirming that your investment is reasonable in terms of amount. You could also do some research and find business articles talking about the average startup costs related for that particular type of business to really support that the money that you have put in is truly enough to get that type of business up and running. Now, if you're buying a business, right, the comparison would be the purchase price that you paid with the fair market value of the business, right? So if you source the business from the open market, that in itself would be the fair market value of the business that you paid. So automatically, your investment will be substantial. Now, if it was not an open market transaction, then to prove that your purchase price was equal to the fair market value of the business, you may want some additional evidence, such as a letter from a CPA, certified public accountant, confirming the reasonableness and the fair market value of equivalency of the purchase price. Now, one thing to note is that franchises are a good option for E-2 visas. Mostly because, franchises have that goodwill that is built in with the franchise itself. And franchises also provide assistance in terms of marketing, branding, and, business know-how to, help you get your business up and running. So any fees that you pay to the franchise itself, like a franchise fee, you can also include in your investment amount. So that could be a good option for some people. Some common good and bad E-2 visa expenditures. So there are some favorable expenses versus some unfavorable expenses to include in your application when you're tallying up the expenditures that you've made to, comprise the E-2 investment. So really, if you have spent money on legitimate investments for business setup, that is common to, when you're setting up a business, such as renting business office space, renting, purchasing equipment, spending on marketing and advertising, licensing fees, employee payroll, setup costs, and costs of payroll, any salary that you pay to your employees, any fees that you pay for accounting services, those can all be good, legitimate investments to count in your E-2 visa application. Less favorable expenses are things where the business necessity can be a little questionable. For example, if you're buying a vehicle like a car, right? It is one story if you have a business need to transport equipment. If you are a cleaning company, for example, and you need to transport equipment in a company van, that's one thing. But if you're only buying a vehicle, a car to transport you from, if you're going to work, you just use it for a ride, for example, that would not really be a favorable expense to count just because the business necessity point is not there. Similarly, any expenses that you pay for travel, for example, if you visited the United States to scope out some business opportunities, and if you bought an airfare ticket for yourself, we would not typically include the airfare for the E-2 investment in a similar manner. Client meals, entertainment, those kinds of expenses we would typically also not include. Any expenses that are directly reimbursed by a customer, for example, if you're pre-booking certain services on behalf of a customer and you'll be reimbursed by that later, we would also not include those types of expenses as an expenditure. Also, another risky type of expenditure is any expenses paid to related parties. For example, if your brother is a landlord and you're renting, space from your brother, that would not really be a favorable expense item, a little bit risky to count in your investment schedule. All right, moving on to the next topic is, do I have to hire employees? So for a successful renewal of an E-2 application and also for successful initial E-2 application, for an initial E-2 application, we would typically want to present the case that your business will hire employees once it gets off the ground. For a successful E-2 renewal application, you would ideally already have U.S. employees. And this directly goes to the marginality requirement. And as a reminder, the marginality requirement is that the E-2 business must be one that makes more than a marginal income that is enough to support the livelihood of just the investor and his or her family. It must also support additional U.S. workers. So if you're preparing for an initial E-2 application, you must demonstrate that you will hire employees in the next 5 years. And ideally, we recommend that the business plan project that the business will be able to hire at least 3 to 4 full-time employees by year 5 of operations. W-2 employees versus 1099 workers. Now, As a general matter, W-2 employees are more favorable in terms of meeting the marginality requirement as compared to 1099 workers, contractors. In some industries, it is the industry standard to use 1099 contractors as opposed to W-2 employees, such as, the construction industry where you would hire, part-time workers, part-time contractors for work. Also in certain food and beverage industries, you may hire a high number of 1099 workers, part-time workers, as opposed to W-2 employees. That could also work. Really, it also depends on the industry's usual practice. So if your practice is consistent with the industry standard, you can use that to support marginality in that case. So how do you prove that you have employees, right? So for initial E-2 applications where you're applying with a new business, you would present a business plan, a detailed business plan that contains a 5-year hiring projections where you would explain what types of workers you will hire, when you will hire them, and what would their salaries be, and really develop the narrative of how your business will make enough income to support those employees. For existing businesses, the way to prove that you have employees are the most straightforward way is to submit W-2s, Form W-2s for the company. You can also submit pay stubs, a recent payroll journal showing all of the employees listed there. Also corporate tax returns that shows the historic revenues that your company has been making over the past few years. Also showing all these expenses that the business has incurred and the profits at the end of the day. All right, the final considerations regarding business plan. So do I need a business plan for an E-2 application? So a business plan could be more important if you are starting up a new business to really show the profit generation potential of that business that you're starting up. Since you're starting from the ground, you really want to show a strong business plan to show the profit potential, the revenue potential, and the hiring potential of your business enterprise. If you're purchasing an existing business, right, the decision of whether to include a business plan could depend on that purchased business historical performance. So if the existing business is already operating strong, and if you can provide, historic tax returns and, profit and loss statements and other documentation that shows strong business revenue generation potential and hiring for that particular business under prior ownership, then maybe you don't need a business plan. But if the existing business hasn't been doing so well, or if the existing business does not have enough employees, then it could be a really good idea to append a business plan to show how you will grow the business after you take it over to really strongly meet the marginality requirement. And here is an outline of some of the content that the business plan can contain to strongly support marginality. So the business plan should typically have an executive summary, which presents a high-level overview of who you are, what do you do, and what do you sell, and who do you sell to, just so that it is immediately comprehensible to the reviewing officer of what your business does and what your business plans to do. Market analysis and research is another useful thing to include. What is the market that your business is operating in? What is the growth potential of that market? And specific to your business, definitely include a marketing plan to show how you're going to market your services to your clientele. This can include online marketing channels. This can include, plans for specific PR campaigns that you could use. And social media marketing, for example, for a business. The purpose is to give a compelling account of how you will develop your business clientele once you start up the business or once you take over the business to really realize the growth potential that you're projecting. A personnel plan. It is important to have the personnel plan as part of your business plan, as I mentioned in previous slides. You should include 5 years of hiring projections and detailed hiring projections, including a job description, salary amount, and when you plan to hire each employee. Similar to this, a comprehensive financial plan is an essential part of a business plan for the E-2 application. You would want to include 5 years of financial projections, which will include how much revenue you are expecting to earn and what are the assumptions behind your calculations of how much revenue you will earn. For example, if you're selling a particular product, you would multiply that by the expected volume of how much product you will sell in order to get to that revenue number that you're projecting. You would want to prepare an intelligent rationale of how you came to that number that is, understandable to the officer. Similarly, cash flow projections, you want to make sure that the business revenue model is such that you would not be running out of cash by the end of the year. Also include a projected balance sheet that shows the assets of the business, the liabilities of the business, and how it all balances out. Now, do you need to hire a professional to prepare the business plan for you? In many cases, it could be a good idea to hire a professional who can really help you vet the reasonabilities of, assumptions and projections, and really advise you on the E-2 compliance of the scale of revenues and hiring that you're projecting, and really to have a second eye to look over your business and confirm that everything is making sense. So yes, it could be a good idea to hire a professional to prepare your business plan. However, definitely note that you yourself need to be familiar with all of the numbers that you submit to the government as part of your application. Really, at the interview, it is you who need to give, the advocacy of the reasonability of all these projections, and you will be expected to know all of these numbers inside out and be able to explain them to the officer because it is your business. So you should really take ownership of all the numbers that you present in your application. All right, so at this point then now I will turn it over to Kelly, who will take us through some of the nuances and other topics regarding E-2 visa considerations and renewal considerations.
Perfect. Perfect. Thank you, Jiyae. All right, so we're going to talk about just some, adjudication trends and developments. So a few things here. One, investment purchases, do they need to be made in the United States? So this is a common question we receive, and there's nothing in the regulations that requires that you do make all of your purchases in the United States. That being said, we have found that there are some officers that will ask how much money was spent in the US. And just given the overarching aims of the E-2 Treaty Investor Program, which are to facilitate, economic, benefit, between the treaty country and the United States. Generally, we recommend to our clients that it's favorable to spend, if possible, the bulk of their investment funds in the United States. So again, nothing in the law that requires this, but definitely, more favorable, when the officer is looking at it. So if you are in a position where you have, maybe you're purchasing inventory and it has to come from abroad, but then you also need to get some equipment for the office or set up a website, try to make those expenditures in the US or with US vendors if a significant portion of what you've already spent has been spent outside the US. Another thing important to talk about is administrative processing. So basically, when you go for your E-2 interview, you can be approved. You could also be denied, or your case could be put into something called administrative processing. So this is kind of what we call a soft refusal. You receive usually a form. It's called a 221G form, which will say, this is a technical denial of your case. Your case has been refused. So we call it a soft refusal because it doesn't mean your case has been definitively denied, and if you want to proceed, you have to reapply. It means that it can mean one of a few different things. So very commonly, administrative processing means they just need some more information. Let's say that you went to the interview and they wanted to see, the extended version of your operating agreement and you didn't have it with you. They might issue a 221G and write on the form, this is what we want you to provide to us, and then they'll look at it later. Those types of administrative processing requests are usually resolved the fastest because they're just waiting on a particular document. The consular officer will review it, and then they'll make a final decision based on that. Another thing that can happen with administrative processing is if something comes up on their side in terms of a security concern, a prior, like some maybe like there's a hit on someone's name, especially if it's a very common name, and those can take longer to resolve. Sometimes they'll ask for more information, like maybe they'll ask for a more detailed address or employment or travel history if they're concerned about security issues, and then sometimes they don't ask you for any additional information. But what happens at that point is that it can be harder to get a definitive answer on when administrative processing is going to wrap up, because ultimately the consulate doesn't have complete control over that. When that happens, generally, that means that there is another agency that has flagged the case for some reason. That agency is doing some type of background check or looking into whatever the concerning information is. And once that agency has cleared the case, that's when it can proceed at the consulate. So if you are in a situation like that, unfortunately, it can drag on for some period of time. It's certainly worthwhile to do continued follow-ups with the consulate. But generally, those are, could take months to be resolved. Sometimes even longer, just depending on how long it is that the other agency takes to clear the case, and the consulate in that, with that situation, the consulate really doesn't have the ability to push the case forward, but you can continue to follow up. So some trends we've seen, over the past few years, we've definitely seen an uptick in, USCIS E-2 filings. So, you have an option to file for an E-2 visa with the U.S. consulate abroad and get a visa stamp that allows you to travel. Or you sometimes have an option if you're in the U.S. in a valid status to change your status, or to extend your status if you're already here in E-2 status. And, particularly because of the pandemic, there were many people that maybe would have wanted to renew their visas in 2020 or 2021, but because of the situation and the timelines at the consulates, which we'll talk a little bit more about in a minute, they ended up doing an extension with USCIS. So there's some pros and cons to USCIS versus the consulate. Sometimes, a benefit with USCIS is obviously you don't have to leave the United States. You can be approved directly in the US. There's not an interview. As well, USCIS is generally more receptive to lower investment amounts. But they are harder on things like source of funds. So there can be some pros and cons, but definitely worth investigating. If a USCIS extension filing is right for you, particularly if there's going to be a lot of difficulty in traveling, or if you are, have a situation where the consulate you want to go to, is still having some issues, with adjudicating ease. So let's talk a little bit about, COVID-19 issues. Thankfully, these have become less pressing, over the years. That being said, still worth mentioning because it is still impacting timing at consulates. So when the pandemic hit, all consular services were suspended for, a very significant period of time. And as they've come back online, over the past few years, consulates have really been left largely to their own devices. So there's really been an ad hoc approach to reopening where every consulate has done so on their own timeline and based on their own resources. And as well, the country conditions of, where the consulates are located have also dictated a lot about which consulates have kind of come back faster in terms of processing. So that's to say that there are some, consulates, for example, in Colombia, where E-2 visas really weren't being processed at all until, late last year was finally when, E-2 cases started to be, accepted again. Versus you have other consulates, for example, London and Toronto, that have been processing E's at a relatively normal rate now for several months, or Japan as well. So it really is still very all over the place. Definitely worth speaking with an attorney about your options in terms of where to apply, because there are some consulates that are really much back to business as usual, but there are some that are still severely delayed, and then there are others that are kind of a middle ground where things are still happening, but they're happening a little slower than they did pre-pandemic. So let's move on to talk about some issues and complex areas, that come up for E-2 visas. So, one is, that can be quite complex depending on where you're applying is the source and trail of funds. This is particularly the case if you're filing with USCIS, but also can be the case if you're filing with consulates, for example, that don't have a page limit or that take the requirements very strictly. So, for example, in London or in Japan. So for those types of, if you're filing with USCIS or at one of those consulates, the source and trail of funds, you really do need to figure out exactly where did the money come from and then follow the trail. Particularly USCIS wants to see a dollar for dollar accounting of everywhere the money has been from the time that it was earned or gifted through to where it was spent on the E-2 investments. So for example, if you say, well, I have $100,000 to invest and I earned it over 8 years of saving my employment earnings. If you're filing with certain consulates, you might be able to just submit a couple of years of tax returns and indicate you'll bring the rest to the interview and then proof of you transferring the investment funds to the US. But if you're applying with USCIS, you would need to show not just the tax returns, but also your bank statement showing you receiving your pay from your employer and then you maintaining those funds. So for example, if you earned $4,000 in a month, but then your bank statement shows that you spent $4,000 in that same month and the money wasn't sustained in the bank account, USCIS won't accept that as being the source of the money. So they really do want to track exactly where the money went. So if you are in a situation where you do have to file with USCIS, you want to be as much as possible having a very clear trail. So if, for example, if you were filing with USCIS and you had an option to either use savings from employment earned over many, many years, or perhaps take out a home equity line of credit on your home that you own, probably the home equity line of credit is going to be better because it's going to be much clearer. You can just submit the line of credit document, the lump sum of funds entering your account, and then those funds being transferred for investments or to purchase the company. Whereas if you are using the personal savings from employment, you're going to have to show years and years of bank statements, and if there are any it's very rare that people would just keep all of their money in one account. Very often they're transferring it, it's going to savings accounts, maybe investment accounts, and all of that trail would have to be traced for a USCIS filing. So an important thing to keep in mind when you are considering where to apply and what your source of funds is going to be. Another thing that's important to flag about the source of funds is that loans that are secured by the assets of the E-2 company cannot be used for E-2 investment. So you could not take out a loan that's secured by the E-2 company. If you do so, they do not consider that your funds, your personal funds, are at risk and irrevocably committed. Another thing I wanted to just mention is gifts. So gifts are permitted. It is possible to use a gift. If you're going to use a gift, you would have a gift letter from the person gifting you the funds. And as well, they would need to feel comfortable providing proof of their financial background. So if they have earned the money, for example, from savings from employment, they would need to be willing to provide you with their tax returns and other financial documents to substantiate the source of funds. So small investment amounts. So this, generally, can be quite a complex area. I think, Jiyae went over this, in a lot of detail earlier, how much investment is enough. So some of this really will depend on kind of where you are applying. For example, if you're applying with USCIS, maybe a small investment amount of around, even $25,000 to $30,000, depending on the type of business, might be acceptable, depending on the strength of the rest of the application, the strength of the expenditures, what type of business it is. Whereas at certain consulates, they may not even want to look at applications where it's under 200,000. So it is very, very, kind of different. There's a huge range of kind of what's accepted at various consulates. And if you have a small investment amount, then generally, that you would need to make all the other parts of the application as strong as possible. And also, as much as is possible to do so, you would want to try to apply at a consulate that is friendlier to lower investment amounts. So Toronto, for example, is a consulate like that. USCIS is another entity that is, very receptive to small investment amounts. Something else that comes up, disappeared. E-2 visas for 2 investors. So this is something we've received a lot of questions about. It is possible to get 2 E-2 investor visas for the same business if it's owned 50-50. So if it's owned 50-50, then there's essentially each party is considered to have veto rights through negative control. Therefore, they can proceed with the application. Each party would need to invest, and ideally the investments should be, relatively the same amount. So, you don't want one partner investing 100,000, the other one investing 5,000. If the investment amounts are going to be so vastly different, it may be better, depending on the nationalities of the parties, to do, an E-2 investor and an E-2 employee application, although that would only be possible if the investor and the employee have the same nationality. So 2 other things to talk about before we move to the next slide. One is substantive changes to the business after filing. So this is something that does come up quite a bit. People will get an E-2 visa for a particular company, a particular line of business, and then maybe they just don't consider it, they don't think about it, they change their line of business, and they don't inform the consulate or get an approval first. So that is a problem if there has been a substantive change. So let's say that you are, running a restaurant and you're, like within that same LLC, you're adding on a bakery. That's fine. Like that's not a substantial change to what you're doing in all likelihood. You're running a restaurant, you're selling food. Now you have an attached bakery that's selling food. But let's say that you are, you got approved for an E-2 visa as a wedding photographer, and now suddenly you want to open a business, or you want to open a restaurant business. So that would be a problem. Any substantial change to the business does need to be, sent to the consulate or to USCIS and approved before the change to the business starts. So you cannot just stop operating your business or start operating a brand new business that has nothing to do with your old business without first getting an approval. The final thing we'll talk about are family business purchases. So I think Jiyae touched on this a little bit earlier, but basically if it's not an arm's length transaction, when you're purchasing, a business for the E-2 visa, there's going to be more scrutiny on it. And at that point, you would probably want to get some type of valuation done so that the consulate or USCIS feels more comfortable that the amount of money that you're paying is actually substantial and makes sense in light of, the financials of the business. All right, common reasons for E-2 denials. So one, low investment amount. There are some investment amounts that are just too low. Even for, places that will accept lower investment amounts. For example, we had a client once who came to us after being denied, and this person had spent $2,000. That's just not sufficient. It's not going to be considered a substantial investment. Just too low. Sometimes, nature of the business. So, real estate is a business where there's a lot of scrutiny. Consulting is another area where there's a lot of scrutiny. Sometimes they will look at those, and if they don't feel like it's active enough, or for consulting, perhaps they don't feel you're going to hire people. They're always worried someone's going to come in and just be a sole consultant. So those inherently make those types of businesses riskier for the E-2. Another one is filing location, venue. There are some locations that are just really not E-2 friendly. Sometimes it's a matter of where the consulate is located, where there's just a harder and a harsher approach to visa adjudications generally. Sometimes it's just, luck of the draw, with the consular officer that you get that particular day. But the filing location can be significant. There are consulates that process, hundreds of E-2s every month, and some that process none or maybe one. So you do want to take that into consideration when you think about where you're applying, particularly how much do you have to invest? Is your source of funds clear? All of those will be important considerations when you figure out where to apply. Another reason, if the officer doesn't believe that the business will create jobs for U.S. workers, this can be a reason why they will deny that they feel the business will be marginal, it won't make a substantial economic contribution, won't support more than the investor and their family. And this concern can be exacerbated by certain factors. For example, if it's a consulting business, there's a lot of concern about that. Are you going to hire people? Are you just coming into work as a solo? Additionally, if the person has run a similar business in their home country for many years and they've never hired anyone, that can be another red flag for an officer to look at that work history and say, well, why should, you have a business plan, but why should we believe you're going to hire, you've been doing the same business for years and not hired anyone. For those types of cases, it can be very helpful to just hire someone before you file, even if it's an administrative assistant, a part-time worker, anything you pay to them or ancillary employee expenses can be included in the investment. And then it also just helps address this concern for the officer right off the bat. Another can be issues with adjudicating officer. Consular officers are human beings. There is a certain amount of subjectivity that comes with how they adjudicate these cases. So it is, an unfortunate truth of kind of the consular process, but it will be an individual person who's looking at your case and making a determination. And even though, there are certain legal standards and they do need to be held to those, and if they completely violate them, there are things you can do to push back against it. Ultimately, the officer does have a vast amount of control over the process. And so whenever possible, if you're having an issue at the interview, you want to be as polite as possible to the consular officer. If you are reapplying in the future after a denial, most consulates will try to give you a different officer, and you may get a different result. So just something to keep in mind that you are dealing with a human being, and so you do want to, advocate for yourself when you're at the interview and also be as polite as possible to them. And then finally, sometimes, you may attend an interview and didn't meet the requirements at the time of filing, like just didn't include what was needed. Going back to the example of, someone who spent $2,000 and put $98,000 in a business bank account, there was not a substantial amount of money that was invested that was at risk or irrevocably committed. It did not meet the requirements at the time of filing. Perfect. So what does it take to renew an E-2 visa? And I know there were some questions in the chat about this. So this slide will cover a lot of those questions. So renewing an E-2 visa, one of the best things you can do for the strength of the case is to hire workers in the United States. We would recommend at least 3 full-time workers within 5 years. The salary doesn't matter as long as it meets the legal requirements of the US. So, minimum wage, things like that. If you have an employee and you're paying them a very, very low salary in relation to the type of job they're doing, that may raise questions. But generally, let's say you have, 4, full-time workers, each making minimum wage, working in your juice shop, that's completely fine. You just need to make sure you're meeting those, state compliance requirements. You also, as part of your renewal application, are going to provide updated financial data. So some consulates ask for all the tax returns since your prior approval. I'd say a lot of them that we see just ask for tax returns for the last 2 years. You want to be able to, if the company had revenue targets and it met them, you want to be able to kind of highlight that. If the company is profitable, you want to be able to highlight that. There's no requirement that the company make a certain amount of profit in order to be renewed. That being said, obviously, showing a net profit as opposed to a net loss is going to be more favorable. We have found that they're mostly concerned with, was your company able to, provide its services and hire workers, and are revenues consistent or growing, as opposed to focusing too much on the net profit line. So if net profits are still pretty low, but you have employees and revenues are in a good place and the business is moving forward, that's generally going to be okay. They're usually focused more on that than they are on any particular number in the net profit line. So you're part of the financial data you're providing. You'll provide payroll. So you want to provide all the W-2s. If you issued 1099s, you can provide 1099s. Those are most effective if the type of business that you're in or the industry you work in commonly uses 1099s. And particularly if you're paying, so, for example, a construction company, maybe you're paying, tens of thousands or hundreds of thousands of dollars to 1099s. Those can definitely be included to help show, significant economic contribution and to try to meet the marginality requirement. So in terms of updated data as well, did you have a marketing and sales plan? Did those increase the volume of your business? If you're a restaurant, do you have a lot of do you have a lot of good Google reviews? Is there anything out there that you can show provide to show that the business is doing well. Maybe you have some updated, client contracts, things like that. So those can be helpful things to include as well, particularly if the financial or employment data is not that favorable. So if the company is not doing well, you may want to submit, as Jay talked about before, an updated business plan that shows that you will hire employees. In terms of the renewal, it's also important to show the company still meets the E-2 requirements. So if the ownership has changed, that's like, as long as you, the investor, still own 50%, that should generally be okay. If your investment, if your ownership has fallen below 50%, that is problematic. There are some alternative arguments you can make about, ownership and control regarding kind of the ability to still operate the company, but definitely something, a nuanced strategy issue that you would need to discuss with your attorney. Also, any changes to the type of business. So if you're in a situation where, your business is changing, or there's been additions to your service offerings, you want to specify that to the consulate. If it's something that's going to be a substantial difference, you want to get that approval first before you start the new service line. So maybe you go to your renewal, you say, this is something we're going to be offering in the future. Once they approve it, now you can add this service line, to your E-2 business. So those are all of our slides. I know we have many questions. We'll try to get to as many as we can. I'm going to just do some quick ones. So someone asked, E-2 visa available for an Indian applicant? No, India is not a treaty country. You would need another nationality that is part of a treaty country. Do the investment funds need to originate from outside the business? So I think we talked about this, a bit earlier. They have to be your personal funds. You cannot reinvest business profits. That doesn't count towards the investment amount. You would have to pay that out to yourself as a salary or a dividend and then reinvest it. So I think Jiyae answered this as well. Yeah.
Yeah. And how do you substantiate your claimed investment amount? You definitely want to provide the receipts of payment, and you also want to provide the proof that the payment was made out from the source of the funds that you're claiming. So if you put the money into your E-2 business bank account, you want to submit the copies of the E-2 business bank account statement that shows the money came out of that account. So we definitely want to include those evidences upfront. Yeah, what's this?
Yes, so there's this, I can take this one, kind of a long question. I think the general takeaway is, no, this wouldn't work. It's the amount that you would own is too low here. So like the company has to be at least 50% owned by treaty country nationals, or 50% if you're an investor. So generally, no, this structure wouldn't work. So there were some questions about kind of franchise options. So we don't advise on franchise options, but there are brokers that you can talk to who could advise on franchise options. So
part-time employees, and contractors. So Kelly went over this in the previous slides, but it really depends on the practice of your particular the field that you're operating in your business. So it could work, but definitely it's a fact-based question there.
For this question, I can take this one.
Sure.
Talks about STEM OPT. If you apply for the E-2 visa and gets approved, can you work for your current employer? And also on the E-2 application. So no, like once you became an E-2 investor, you could only work for your E-2 business. If you wanted to continue working for your STEM OPT employer and it was it made sense in light of the type of E-2 business, you could potentially work for them under a business-to-business agreement under your E-2 company, but it couldn't be as a direct employee for your STEM OPT person. So for some of these that are very, very long, my recommendation is going to be that you set up a consultation so we can go through all of that in detail with you. So we'll kind of focus on like the high level question here. So if the high level question is total investment amount of 55,000, is this too low? It's a very low. It's on the low side. It's possible to submit to a consulate, for example, like Toronto or with USCIS, and argue you've spent everything necessary, but it is very, very low. So if it's possible to get the investment amount a bit higher, that's better. We do provide business plan services. You can reach out to us separately. I'm happy to send you our engagement letter that outlines our fees and services for the business plan and the E-2. Someone's asking about having your clients be outside the US. Yes, you can do that. we don't assist with finding escrow service companies. If anyone has, this person's asking about our fee structure and time for the E-2 visa, you can certainly reach out to us. We're happy to send you, our engagement letter for the E-2. Does the E-2 visa process speed up for clients from the United Kingdom? The consulate in London has their own processing times, as do each consulate. London right now is, I think, around 6 months, unfortunately, to get an E-2 appointment. So I think this is asking about E-2 renewals and profitability. So we talked about this in the other slide. How easy or difficult is Toronto? Toronto takes a very holistic view of the source of funds. They will sometimes issue a request for evidence and ask for more information, so you do need to have all the documentation, but they generally will take a much more holistic view than, for example, USCIS. So if you are doing savings from employment, generally tax returns and proof of transferring in the funds is sufficient. Yes, someone's asking about using your house as the source of your investment funds. That's completely fine. Just proof that you own the house and then proof that you sold it is fine. Someone's asking about the consulate in Toronto. And so basically the consulate in Toronto, there's some screening questions, and one of them is, are you either resident in Canada or in the US? So generally, if you are not, like, the screening questions will not allow you to continue. Sometimes the consulate will accept other applications, but this will kind of change based on their capacity. So over the years, sometimes I've seen Toronto stop accepting third country nationals, although for many years now they have accepted them. During E-2 visa processing, does USCIS ask about children? So if you want your child included, then you do have to submit an application for your child. So if your child was with you, you'll submit an application, for them to have their own status in the US. Someone's asking, can you invest in commercial real estate while running your existing E-2? You can, as long as it's passive investments. Whether profitability. Someone's asking about whether profitability of the business is considered or the tax paid, because the business had a tax credit. Their focus is really going to be, as I said, on kind of revenue. Have you hired employees? Any tax credits that you took, as long as they were appropriate, based on your status, shouldn't be an issue. Someone's asking about to ensure approval, is it better to purchase a well-known business? There are lots of benefits to purchasing an existing business or a well-known franchise, so that can be something that's beneficial. Yes.
I can take the few. Okay, so can we be one of the employees for the business? So, yes, that is true. You can certainly work for your E-2 enterprise. However, for marginality purposes, definitely plan to take other employees other than yourself or your spouse, for example, to prove marginality. Ownership percentage is too low, but I still have control over the business. We think it is generally risky. Now, definitely, you should talk to a lawyer if that is your particular case, but we would generally recommend having the 50% or higher for control. Do you need prior experience in the business I'm investing in? It is favorable in proving that you are in the position to develop and direct the business if you have related experience either. It doesn't need to be particularly in entrepreneurship, but definitely you should have, be able to explain how you have the skill set to run the business. I am a Canadian. Can I be in the United States and file through USCIS? If you are in the United States in a different status, and if you apply for a change of status, that could be possible, change of status to E-2. There are particular considerations in doing that, though, so definitely reach out to us if you'd like to do that. Father is 100% stakeholder of the E-2. Can we transfer 50% of the share to eat the E-2 business requirement? I'm not entirely sure if the child wants to become the E-2 investor, but in cases like this, definitely set up a consultation. It seems like it's a complicated fact pattern here. If you sell your house, do you also need to show how you bought the house if it was over 10 years ago? For a consular visa application, normally you wouldn't need to go 2 levels to show how you bought the house originally, as long as you show that you currently were the owner of the house and then you sold the house through a purchase sale agreement or something. That should normally be enough for a consular application. Do you assist in purchasing a business? So what we do is we advise on E-2 compliance, right? So if you work with us, then we can review your purchase sale agreement and tell you high-level comments regarding E-2 compliance, but we don't really assist with the business transaction part of it. For that, definitely hire a business attorney for that. Let's see. Change of status is recovered. Can primary appear in Toronto also for E-2 visa, or is it yeah, definitely for specific questions, for fact patterns, reach out to us for a consultation and we will be happy to help you go through the risks. Selling a house in Canada and putting that money for business in the UK work against the E-2 case? Not necessarily. If you own the house and if you sell the house to, fund your E-2 investment, I don't really see how that would be a negative factor for the E-2 case. All right, so I think we got through all of the questions. Thank you so much, everyone, for your active participation. And definitely we will send you our materials with the links to set up a consultation should you wish to discuss your case further with one of our experienced attorneys. Thanks everyone for your time. Thank you, Kelly, for your time and expertise. And I hope everyone has a good day.
Thank you.